much, much more difficult, right? It's slower to build the capital reallocation machine while also building the machine that makes the capital to begin with. You kind of have to have both. Now, the main advantage of this is that you keep the control and the equity. So you have a whole, bigger slice of the pie. You decide the pace, the strategy, and ultimately you can exit on your own time horizon or never exit at all, right? And the goal is that you design a compounding vehicle, which is either recurring or reoccurring within the business. And then you let that over time do the heavy lifting. That's the end goal. Now, a lot of first businesses don't have any of those things, but you buy a dollar, sell for two, and you make money. There's nothing wrong with that. Here's some of the trade-offs. When you bootstrap, you incur more debt than any other vehicle. Now you're like, wait a second, I thought I was using my own money to start this thing. Yes, but you incur every other type of debt. And oftentimes every other type of debt is harder to pay off than money is. So what do I mean? If you're starting with your own cash, it's very difficult for you to attract like a star talent team of 10 people that all need $1 million plus per year to work and actually grow this thing. If you're venture backed, you can do that with some stock and then also decent cash compensation. And so that becomes harder to do. So you incur lots of management and leadership debt. If you can't get the high enough level of the softwares that you need in order to build your software company or whatever, if you start low, you're going to have some technical debt that might incur as along the way. Same thing with your data debt. So you're gonna have lots of debts that money could have otherwise solved for you, but you don't have money as one of the things that you're in debt for. Now, to be clear, there are pros and cons there. The pro is that you can stay alive a lot longer because you typically keep your cost basis a lot lower. The downside is that it goes slower. And so your capital constraint will oftentimes limit the size of what you can pursue from day one. If you wanted to start an AI robotics business to go global, it would be incredibly unlikely that you would succeed because the amount of capital it would cost to just build one robot, let alone many robots as you scale, and then you'd functionally probably lose money on building that first robot. And then after you lost money on that first robot, you'd somehow have to get more money to then build more robots. It's very hard to do without outside injections of cash. And so this box does constrain, to a degree, what kinds of opportunities you can pursue. And there's a reason that some of the biggest people in the world start here, which is a perfect segue to, okay, so what is other people's money into your